Is the stock market going to crash soon? And should you be worried about it? Stay tuned. What's up, you guys? My name is Hussein. Welcome back to the IPO Nerd, the best place to learn about new companies going public and how to invest in them. America's #1 IPO news channel. So today, I'm going to take a different turn. We're not going to talk about IPOs, but we're going to talk about the upcoming stock market crash that everyone is talking about, guys. It seems like every single week we hit a new lowest level for 2022, right? Things in the housing market are slowing down big time. There's less and less people applying to buy a home. We also have unemployment has held steady, which is the good news. However, there's impending doom. Everyone's talking about the stock market crashing another 25 to 30%. So in this video, I want to go over an article that says the stock market dropped to its lowest level in 2022, and here's what the experts predict for the rest of the year. Now, these are the so-called experts, right, in Wall Street. As you know, the thing about the stock market is it doesn't matter if it drops 20, 30, 40, 50% right now in the next couple of years. These are great buying opportunities for us long-term investors anyway, right? Because we plan to stay in the stock market for the next 20, 25 years before we actually retire, which is a word that gets tossed around. But basically, if you're doing what you love, you're already retired. You know what I'm saying? So I wanted to look at this article with you guys today on a Sunday. Let's chill. Let's look over it. So make sure you drop a like, subscribe to the channel, and let's get right into it. So the article is actually from time.com, and it says the stock market dropped to its lowest level in 2022. This seems to be happening, guys, every other week, right? We dropped to a newest level. So let's see what's happening and what the experts are saying that you should do with your stocks right now. Stocks dropped to a bear market level on Friday, closing at its lowest level in 2022. This came about after the Fed announced a 0.75 rate hike on Thursday, the fifth rate increase this year and the third consecutive 75% jump. So if you've been following the Fed, right, and you can find their YouTube channel as well, the implications was that they were going to continue this 75 or three-quarter point basis raise, right, until they get inflation down to 2%, which is their goal by 2024. That used to be their goal by 2023, but they push it to 2024, which means they are going to continue the rate hikes. And this is something that has a lot of people worried because they want to get inflation under control, but they got to make sure that they don't throw the economy into a recession, right? Which is what many people are fearful about. It has already been a tough year for the stock market. The average U.S. mutual fund or ETF is down 17.3% since the beginning of the year, guys. These are baskets of stocks, right? They're supposed to be safe or they're supposed to be diversified, and they are still going down 17.3% this year. So no one is safe. Even if you pick stocks out there, even if you bought the ETFs or mutual funds or whatever, you're still down for this year right here, according to this article, 17.3%. That is tough. That is tough. Between recession fears, high inflation, and high interest rates making things harder for businesses and individuals alike, investors are reasonably concerned about how much worse it could get in the coming months. There's a lot of volatility, so we asked 6 experts what they thought about what may happen for the back half of 2022 and how to prepare for the worst. The first expert said we are going to see a lot of churning. If the Fed aggressive rate hikes push the economy into a recession, companies' earnings will be affected, which will in turn affect the stock prices. So that's what they're talking about, churning, right? Earnings will be affected. Companies are going to come out week after week and report earnings drop, right? Which is going to lower the stock prices. This is not good, right? As an investor, this is not good. At this point, I think it's going to be shallow pullback, maybe another 10% from where we are right now, says Macmillan. Once the economy adjusts at a higher interest rate, we are going to see it starting to move up again. This is according to the first expert. Let's see what the second expert has to say. The second expert is saying, I don't think we have hit a bottom yet. At any time market begin to decline, investors wonder how far down will it go, but that's nearly impossible to predict. That's why they tell you timing the market is better than timing the market, right? When you see your stock portfolio go down 20% and maybe more, investors are able to get an awakening, according to Munoz. I don't think we've hit bottom yet, okay? From what we've seen in the first half of the year, the market has taken an extended downturn beyond 10%. His advice is to keep investing on a regular basis. That will be also my advice to you guys, okay? To keep investing on a regular basis. You know, you can do it weekly, you can do it monthly or whatever. You know, get those withdrawals, down sent to your portfolio. But these are great times to buy more shares of the companies that you love, that you use every single day. The third expert says the market hates uncertainty. This is true. The U.S. stock market looks forward and prices in breaking news in real time. With so much up in the air, it's hard for investors to make sense of what's happening day to day. That translates to a volatile market situation that will last for a while, with more Fed meetings scheduled this year. If you are looking at the stock market day to day, your head is going to explode. You can't look at the stock market day to day. I mean, just this week, I thought I think I'm down $4,000 or $5,000 or something like that. So, and then the following week, I'll be up $5,000, $6,000, $7,000. So you can't look at the stock market on a daily basis, and you can't look at it day to day or week, even week by week. You have to be looking at years ahead. Garcia suggests not to steer away from your investment plan and keep an eye on the horizon, as investing is in the long-term play. So this expert right here agrees with the previous experts. The fourth expert says we could be down another 20%. With regard to finding the bottom, the next few months are about to not creating even more losses in your portfolio as opposed to making your own predictions. He says that we could be down another 20%. That could happen. No one knows the answer to that. She continued, but stay diversified and keep investing anyway. That will be my best advice for the next 6 months. So it seems like all these experts are agreeing with each other. Just keep investing and all that. Diversified. I would tell you that, yes, diversify within your portfolio as far as like different sectors of the stock market. I wouldn't ask you or tell you to go into like Bitcoin or any of those cryptocurrencies. I would not suggest that. I would not suggest any NFTs or anything like that. But I would suggest, in my opinion, I think it's worth looking into some of the blue chip companies that have lost value in the last year or so due to this economic situation. So that might be good to look at. The fifth expert says, I don't think the worst is behind us. As volatile this year has been so far, we still stay prepared for even more shifting. Consumer spending is changing, and your all set factors are completely unique when compared to anything that's come before. Yes, you have seen a shift in consumer spending as people are not spending as much money as they used to. That's because either they don't have it, it's more expensive to borrow money, and they're just being more careful because they see what's happening around them. They see people hurting for, to make ends meet. They see what's going on, guys. So a lot of people don't want to go out there to do any discretionary extra spending. And that's understandable. So I do agree with that. As we look at the second half of the year, I would expect more volatility. We could see a little run up like we did before, but the trend and the trajectory is downward. I don't think the worst is behind us. So this right here, this expert right here, is a little bit of a doomsday situation that he's got going on, right? And the last but not least, the expert number 6 says that there are opportunities to buy. That's what I've been saying all this whole time during this video, right? When stocks go on sale, everybody wants to sell. It's really strange. It's at their peak prices that people want to buy. It's all backwards. And this is something that I noticed in the investing community. Not you guys, of course, because you guys are smart. You know what you're doing. But a lot of like new people, they get nervous, whenever their stock prices go down and their portfolio drops by 20-30%. It's understandable, but remember that investing is not a feelings thing. It's not an emotional thing. You have to keep control of your emotions and take the opportunity to invest more and buy more. Investors have been in this mindset for the first half of 2022, even though companies have had attractive valuations. There are opportunities to buy some really phenomenal companies right now. If you can buy, you're going to be very happy if you continue to hold your investments. So 5 out of 6 expert guys are telling you to do what? To buy more and stay invested. And don't let the day-to-day things that are happening with the stock market worry you and draw you into like panic sell. So 5 out of 6 expert guys are telling you to do this. But what do you guys think? Are you going to sell your stocks and then wait for the stock market to hit bottom, maybe another 25-30%, and then come back in and rebuy all your stocks at a lower price? Or are you going to stay steadily investing in the stock market every single day and continue to add to your positions as we see lower prices come into play? Let me know in the comments below, guys. I just wanted to jump on here real quick and share this news with you guys. But of course, guys, it's just my opinion. I'm not a financial advisor. This is not investing in financial advice. So make sure you do your own research And let me know what you guys think in the comments below. As always, guys, if you like this video, make sure you drop a like, subscribe to the channel, but more important than that, make sure you guys take care of yourselves. And I'll see you soon.
I bring up the pain, Rickosaurus the main. I make the market rain like acid rain. An investing channel you ever known, ya. I take your girl, your house, your money, leave you broke, son.